traders at Apakan Securities say activity at secondary markets was driven by offshore participants in search of higher yielding fixed income instruments. They also expect a firm cedi through the first quarter of the year to support a stable non-food inflation. And joining me from Accra is Edem Nicholas Kporku, who is a research analyst at Apakan Securities. Thank you so much for your time today, Edem. And let's first get into some of your key highlights of the market for the month of February.
Hi, good afternoon. Well, with the December 2020 elections now out of the way, Ghana has become a foremost destination for fixed income investments in Africa, with relatively high yielding fixed income securities and a stable cedi since right around Q2 of 2020. Investors' attention has been drawn to the country. And also, the FX issues in Nigeria has also been supportive of a diversion of attention into Ghana. Now, primary demand for securities has also been very robust, with the last 2-year offering attracting bids of about 3.7 billion Ghana cedis against the targeted 1.8 billion cedis. The data has also shown an increase in foreign holdings of Ghana cedi denominated assets, with about 4 billion increase in foreign holdings between December 2020 and January 2021 to about 39 billion Ghana cedis. The strong demand is also translating into lower yields across the curve, and it's also translating into a firm cedi in the market. Year to date on the interbank market, the cedi is up by about 0.4% against the USD, while it's up by about 2% on our retail markets.
All right, but let's look at what's driving the performance of the cedi so far. We saw that gain in February, but what has it been like in this week?
Well, primarily the strength of the cedi, the main driver of the cedi has primarily been the foreign or offshore investor inflows that have been coming in for investors looking for high yielding securities. The Bank of Ghana has also been conducting bi-weekly FX issues, which has also been supportive of the market and keeping the cedi very, very stable. In Q1 of 2021, the bank said it will be selling $50 million every 2 weeks, up from its usual $25 million US dollars that has been issuing. And well, it says it will revert back to the 25 million after Q1. So basically, the strong demand is coming from the offshore guys. And also, we've seen a lower volume of imports coming in, which has also muted dollar demand, which is also supporting the cedi.
All right, but now let's look at what your expectations for inflation are, especially in the first quarter of the year.
Well, the main driver of inflation currently is food prices. In December, there was a food price induced hike in prices, which led to higher food prices, and which also ultimately led to a higher headline inflation. But with that, we've seen that food prices have seen a consistent decline since then, and then which food prices have slowed to about 12.8% year on year in January, and we expect the trend to continue going forward in Q1.
All right, interesting views there, but let's get what you are looking at, especially in the fixed income market, especially in the near term. What are your expectations for the rest of this week?
Well, we expect the markets to remain vibrant. Currently, there's an ongoing 5-year auction which targets to raise about 1.4 billion Ghana cedis. The market is currently awash with liquidity, and demand for government securities still remains strong. So we expect that the auction will be fully subscribed. And on the money market also, we think that the government still achieve its auction targets with some downside for yields this week.
All right, now definitely we've seen that the government continue that vaccination exercise in Ghana. We know definitely what that will mean for the markets going forward. But I'd like to know what the market is reading into that in Ghana.
Well, right now it's mostly business as usual here. Everyone is currently looking towards the 5-year auction that is currently ongoing. The books are expected to close later today, and then we'll see what comes from there.